Hey guys, welcome to the Block Thrasher Daily Morning Crypto Update, where we are shattering the complexities of crypto with news, commentary, analysis, and education. Listen, I know that you're busy. You don't have time to go scour the web and find the cryptocurrency news of the day, so I'm going to do that for you. I want you to be as informed as you possibly can of what is happening in the cryptocurrency space. And I want you to learn as much about crypto so that you can make the best possible investment decisions. Listen, the idea is grab the podcast, listen to it on the way to work, play the YouTube video while you're making a pizza in the kitchen. I don't know, but please be sure to subscribe so that you can stay on top of today's news. Tell your friends, tell your family about it. Let's get started with the word of the day. The word of the day is actually what we're going to do right now. We're going to have a little bit of a conversation, a chat. The word is confabulate. Confabulate. C-O-N-F-A-B-U-L-A-T-E. Confabulate, which means to converse informally or to chat. So let's do that. Let's confabulate. Welcome to the Block Thrasher Daily Confabulation. All right, moving over to the market. Let's look at what is happening with prices today. We're seeing a lot of red. Ouch, we don't like to see that, right? Bitcoin is currently $49,000. 900. Whoa! It just broke 50,000 right in front of our eyes. It is down 1.19% in the last 24 hours. Overall, the market is moving nowhere. It's just going sideways, which actually is a good thing. Typically, the month of March is a month in which the market trends down, and sometimes in the past, such as in 2017 on March 12th, we saw Black Thursday when the market dropped, like Bitcoin price went down 50%. So if we can make it through the month of March without a drop like that, I think it's going to be a good sign that this year is going to be an incredible year for crypto. Now, Ethereum is $1,592 right now, just holding steady. It is down 3% for the last week. Cardano is $1.14. Cardano's taken a little bit of a hit in the last 24 hours. It's down 7%, but it's still up 10% for the last 7 days. One of the outliers in the top 10 right now. Actually, the only outlier to really be up a fair amount in the last 7 days. Now we're going to drop down to Uniswap in a little bit, which is killing it while the rest of the market is red. But moving on, Binance coin, $238.89, down 2.17% in the last 24 hours. Polkadot's up for the week 5%, but down 3% in the last 24 hours. Currently $36. Litecoin is $187.56, down 2.43. Oh, and I just accidentally skipped over XRP, which is number 7 in market cap. It is up 9.27%, so it's getting a little bit of a pump overnight. It is currently at 48 cents. Chainlink is up 5% on the week. Just a great. The more I look at Chainlink, the more I think this is a really stellar. Maybe I shouldn't use stellar because stellar is number 11. It's phenomenal. It's a solid project with its chain agnostic approach, and it's just an oracle that pulls out outside data and makes it available to blockchains and all different kinds of blockchains as they add that capability with new projects. We just saw in the news recently they just connected that with Binance Smart Chain. Anyway, good project. Currently $29.15. Bitcoin Cash is $521.42. Stellar is 42 cents. Uniswap is the outlier, up for the week and in the last 24 hours. Of course, that 24-hour pump is what has pushed it up into that, increase, 13.67% in the last 24 hours. It is currently $29.39, and that would be a wrap. Well, I guess we'll talk about Dogecoin. It's down close to 10% for the week, down in the last 24 hours, just sitting right at 0.05. I think Dogecoin has seen its high. The celebrity meme driven pump has come to an end, and there really isn't anything else. I mean, yesterday, I think it was, or the day before, there was some news about Dogecoin being available at a whole bunch of ATMs throughout the United States, Bitcoin ATMs, but that didn't seem to do much in terms of pumping the price, and I do think it is over, despite the fact that there's probably a lot of people that are new to the space that picked up some Dogecoin, not knowing much about the coin itself, and just following the mass hysteria, But that's one of the things about investing. It's a core key principle that when everybody else is selling something, that's when you when everybody else wants to is buying, that's when you sell. When everybody else is selling, that's when you buy, right? As simple as that. All right, moving on to the next segment. Let's look at our first story of the day, which is that the Bitcoin bubble concept is a myth. The title is The Bitcoin Bubble Myth. This is written by Pete Rizzo at Forbes. As 2021 begins, Bitcoin's rising price has brought forth the usual commentary that has dodged the digital cash project for a decade, that it is little more than a bubble propelled by market manipulation and euphoria. So what he does is he talks about how there are these two different analyses of what happens with these Bitcoin run-ups and these cryptocurrency bull markets. The one side says that this is just driven by euphoria. It's driven by FOMO, essentially, the fear of missing out, that the price starts to go up and people start to talk about it around the water cooler at work or in the coffee shop, and then the retail investors just start to pile in, and this euphoria just drives the price way, way, way up, and it creates this bubble that then bursts and just the whole thing's crashing down. And of course the mainstream media views it that way, and they latch on to that hypothesis, and they see that as the simplest model, right? So a rapid increase in a new crypto assets and an increase in trading venues, some of dubious legal status, had again fueled a market overly driven by inexperienced investors, and that's how they look at it. That's how they explain it. But Bitcoin enthusiasts have another hypothesis, and they take a skeptical stance to that conclusion. After all, according to this article, there was a new monetary technology to reckon with, one whose economy was just over a decade old. So they asked different questions. How was it a price decline occurred again in spite of attention from investors and media? Why did its 2017 chart so resemble the bubble seen in 2013? And why did price declines in 2019 and 2020 stop at levels far higher than observed years earlier? To answer these questions, a new hypothesis emerged. What if Bitcoin's price bubbles are the product of its programming? So what he talks about here in this hypothesis, which is his hypothesis, is that these bull markets and then the crashes that ensue, the cycles, the 4-year cycles, are basically a part of the programming of Bitcoin and the halving that happens, and the way the mining works and the amount of tokens that are released into it, right? So he notes that the answer lies in the programming of Bitcoin and how it defines the availability of Bitcoins within its economy. As established in the code authored by Satoshi Nakamoto and released in 2009, Bitcoin has 3 qualities that distinguish it from nearly all other global economies. Number one, it has a fixed 21 million supply of units, which is divisible to 21 quadrillion units, which of course we call Satoshis or sats. So we talk about stacking sats. That means, that correlates back to the gold bugs and the silver bugs that were stacking silver, stacking gold, and you'd take those coins and you'd stack them up, right? So we're stacking sats, which is the smallest divisible amount of Bitcoin, and there's 21 quadrillion sats, right? So you can stack those by saving, is what we're talking about. So, number two, it reduces, that's Bitcoin, the rate at which these new units are introduced to its economy on a programmatic schedule every 10 minutes. It has no central operator and is instead maintained by thousands of computers running its software, which is the decentralized nature of Bitcoin that we often talk about. So much attention of late has focused on the third value proposition, decentralized nature of it. In the wake of government intervention in markets in response to the COVID-19 pandemic, the mainstream has become interested in alternatives that shelter value from policy influence. And I would say that really was part of the initial impetus that was the genesis of Bitcoin itself, right? Because Satoshi Nakamoto released Bitcoin in 2009, just after the great financial crisis of 2008-2009, when we started to see the Federal Reserve and the United States government step in and start to do things like quantitative easing. And there was the TARP program, Toxic Asset Relief Program, in which billions of dollars was given to banks. And then there was the bank bailout. And so people really, including myself, started to look at what was happening at that time. And I would say that over the time since, more and more people, as we see more stimmy checks, right, the stimulus money coming out with the COVID crisis, this happened again. And people start to say, well, wait a second. If it's possible for all this money to just be generated and created and sent out, why do we pay taxes? Why do we work? Why does any of this happen? So it raises all these questions, right? And then people start to say, well, isn't this new increase in money that's just flooding into the economy going to cause inflation at some point? And that can get into really deep discussions, and there are very smart people that will talk about the macro issues and how the Federal Reserve is able to raise interest rates, and then they can tax more, the IRS can, the government can tax more, and there's all these things that they can do, but at a point, it might just unrail, like come to the point where it's gone too far and they lose control and they aren't able to manipulate that. And so for these reasons, people were looking for alternatives to shelter their value, the value of the money that they hold, from policy influence, from the possibility of malmanagement, malinvestment, etc., or mistakes made by either the Federal Reserve, central bank, the government, whoever it might be. So going back to the article, to focus on the third quality is to focus on only part of the story. After all, no investor is going to buy an asset unless they are convinced they are doing so at a favorable price. So why are Wall Street investors taking another look at Bitcoin? Simply put, they are betting on the long-term impact of the first two properties of the Bitcoin software on its asset priced. Investors like Michael Saylor, MicroStrategy, Elon Musk, Tesla, are looking back at Bitcoin's price history and they are seeing a pattern. They are betting on the idea the Bitcoin market will be volatile, yes, but they are also betting that it will be upward and cyclical. And of course, Michael Saylor talks about this all the time. He always says that if you look at Bitcoin and 4-year cycles, periods, you basically, you can't lose. It always more than doubles. And this article is pointing the same thing out, right? So said another way, the Bitcoin price has created relative conditions of stability that allow them and any investor to plan for the future. So this is an interesting hypothesis. This hypothesis that the boom and bust cycles of the bull and then the bear that comes in and the crash is something that is, maybe in this case, the hypothesis is arguing the primary influence in that cycle. Now, I would not want to undermine the hypothesis totally, because I do believe that this is a pretty solid argument, that it is likely that the economics of how Bitcoin works and the halving, right, which happens on this cycle. We are now in, I believe, the fourth halving, right? But when the halving happens, the amount of Bitcoin that gets created by the miners is cut in half. So this is a reducing supply of Bitcoin that's getting minted, mined and minted. I just combine the two, minted. Yeah, no, that's not a word. So by reducing the supply of new Bitcoins minted on a 4-year cadence, it appears the software is setting the conditions for a 4-year boom and bust, is the argument of this hypothesis. And like I was going to state, this is very interesting and, again, potentially a significant factor. That being said, there are other issues, more macro issues, such as adoption and the growth of the space, which would be a factor that would be in opposition to this hypothesis, right? Or not even in opposition, but just a better, further, maybe more complete explanation of what happens within the market. And going forward, I believe that the amount of adoption that is coming in with retail investors coming in, because the onboarding process is getting so much easier. There's much easier ways for people to get into crypto and to start buying through Robinhood and Webull and the Cash App and PayPal, and it just goes on and on and on, and Gemini, and that, in addition to the institutional investment that's coming in, and just the explosion of things like DeFi and the NFT market, all of that could work to, even if this hypothesis is true about the technology itself and the programming of Bitcoin and the structure of its economy, economics of its release of coins, etc., that could just nullify that, essentially. What I'm saying is that adoption and all those other macro issues could just nullify that, at least in the short term, where we could see the market double, triple, quadruple, and still keep going and go much, much further, just because there's so much room for growth and for expansion. Because Bitcoin is still, just under $1 trillion market, which is small. It pales in comparison to gold and silver and other markets. So it's a good hypothesis, and I'm sure it's a factor, and it's something interesting to look at, but I just don't think it is probably the entire story, right? Moving on to the next story of the day. Another sign of mass adoption. We're seeing institutions, universities, educational institutions around the country and around the world start to adopt cryptocurrency and provide courses and education for blockchain more and more. And this story talks about that. Parity, which is Gavin Wood's company that also built Substrate and Polkadot, is going to educate Berkeley students on developing blockchain projects on Polkadot. Dr. Gavin Wood, the co-founder of Ethereum and Polkadot, will give a lecture at Berkeley after a partnership between the university's blockchain program and Parity. So they've come to this partnership. They're going to be collaborating, and Parity will be educating these Berkeley students about blockchain. Good stuff. Love to see this. I know there's a lot going on all around the country University of Wyoming, and others, so many others that are jumping on board with this, and this is good. All right, moving on to the next story. We just saw the first major rug pull on Binance Smart Chain with an over $30 million was drained. So what is this? What is a rug pull? Let's talk about that for just a second. A rug pull happens within DeFi. One of the crazes of this last year was this DeFi liquidity mining thing, right? Mining farms, mining pools. And so the way that works is like this. I'm going to use a real project that existed, which was called Katana Finance, to explain this for you guys. What you would do is you would take $1,000 of Ethereum and $1,000 of an equal amount of the Katana token. Now, the amount could be any amount, but we'll just use $1,000 as an example. So you would go to Uniswap and you would trade Ethereum or whatever for $1,000 worth of Katana, the Katana token. Then you would put that Katana with the equal amount of Ethereum, so $1,000 Ethereum, $1,000 of Katana, into a liquidity pool on Uniswap, and they give you what is called an LP token. Then you would go to Katana, to the Katana project, to their website, and you would go and you would stake your LP tokens that were in your MetaMask wallet, right, which you had gotten from Uniswap. You would stake those by locking them up in the Katana staking pool smart contract. You just click on the button and you would stake it, and it would do that. And when you would do that, that Ethereum and that Katana was gone from your wallet, right? It was in the smart contract. So if you looked at the balance of your wallet, it was gone. Why would you do this? You do this because they were giving insane ROIs, like 13,000% ROI. But in order to actually pull out that value, you would have to unstake it. And when I say they were giving a 13,000% ROI, what they were giving you was more of the Katana token, not of the Ethereum token, Katana, or not Ethereum, but of Katana token. So a rug pull happens when there's either an error, not really an error. What happens is the smart contract, the author of the smart contract, so which is the founders of the project, they can change the smart contract. So they go and they change the smart contract, or they just wrote the smart contract from the beginning to take all those tokens that you would put into the liquidity pool, and then they just disappear. The project just goes away and shuts down. The website's gone, the Twitter account is gone, Facebook page is gone, wherever they're at. If they're in Discord, it's gone, Telegram, gone, and they disappear with everybody's funds. That's a rug pull. And so this just happened for the first time on the Binance Smart Chain. Now, the Binance Smart Chain is basically a clone of Ethereum. It uses the Solidity programming language for its smart contracts. Its smart contracts are essentially the same. It uses the EVM, which is the virtual machine that Ethereum uses. And so this happened. So what appears to be the first major rug pull took place on Binance Smart Chain. Over 30 million worth of BUSD and BNB were drained. Binance Smart Chain has become somewhat of a hot topic amid DeFi gem seekers in the past few weeks. The network saw an influx of new projects, reminiscing of the early days of the DeFi craziness last summer. In any case, hours ago, the community was shocked earlier today when news broke out that one of the newer protocols, Mercat Finance, was drained. Mercat Finance is a yield farming protocol that runs on Binance Smart Chain, and a few hours ago, the team revealed that it was, quote, hacked and drained by 73,000 BNB and 13 million BUSD. The total number amounts to roughly over $30 million at the time of writing. Incredible. Now, this team is claiming that they were hacked. However, the fact that the website went down and they basically have disappeared makes it look like it was a rug pull and a fraud, not a hack. So who's to say? But this underscores and highlights one of the really huge issues that needs to be fixed and answered and dealt with in the DeFi space. Part of the problem here has to do with the way custody works on Ethereum, and the fact that when you get involved in these DeFi projects and these liquidity farming, yield farm things, that you don't have custody of that token, of your tokens. It gets locked up in the smart contract. And so, and similarly on the Binance Smart Chain, these guys are stating, Mercat's claiming that somebody hacked the smart chain. And they're saying, not smart chain, the smart contract. And they're saying the way that they did it was someone got access to the original smart contract creator's key and account and made a change. And so this is a vulnerability, and it's a bad vulnerability. It's a bad issue because essentially what it means is that the whole idea behind this decentralized finance is that the code runs everything, and you don't have to trust anybody, right? It's supposed to be trustless, but it's not, because either the creator of the smart contract or someone else who hacks it can go in and steal all the funds. So this has to be addressed. This has to be fixed. And I do believe that this has something to do with it's called accounting model that Ethereum and Binance Smart Chain uses versus a UTXO model, which is what Bitcoin and Cardano and some others use. I do believe that there is a way, and we will see with Cardano and some of the others, where this can be solved through DeFi products where you still keep custody, or there's something used like the Bitcoin has the multi-sig, where there's 2 or 3 signatures and you can't withdraw those funds or use them without that third signature. So in essence, what that would mean is that if you put your capital into this smart contract or into this liquidity pool, this DeFi platform, they can't take it without your approval, right? So like you could give them access to it, you could do different things, but it would protect. And so this is what I think we're going to see happen. And then I think that from what I've read, and this isn't verified yet, so don't come back and just be like, you were wrong. I'm just saying from what I've read, it appears that on Cardano, for instance, it's going to be possible to maintain custody of your tokens while also putting them into a liquidity pool, and this is because of the difference between the UTXO transaction model versus the accounting model. So anyway, that'll be something interesting to see. If that is true, I think it's going to be a huge boon for Cardano. All right, moving forward, I was going to talk about BitMex today because BitMex is opening up their exchange with 3 new product offerings, which are spot trading, brokerage, and custody. And maybe I guess I already did start talking about it, so I'll just go down this path just a little bit. There's some interesting history about BitMex. Now, BitMex is a cryptocurrency exchange and derivative trading platform, which is owned and operated by HDR Global Trading Limited, which is registered in Seychelles and has offices worldwide. Now, what happened with BitMex was they were registered outside the United States. All but one of their founders was outside of the United States. They tried to move everything offshore. they ran their BitMex exchange, which provided these futures and derivatives, perpetual futures they were called, and it was the largest futures and derivative exchange for a long time. Its founder, one of its co-founders, Dello, in 2018, he became the United Kingdom's first Bitcoin billionaire. So they were incredibly successful. But in July of 2019, Nouriel Roubini, a critic of cryptocurrencies, of course, sort of the infamous Keynesian economist that, has never had anything but horrible, terrible things to say about crypto, suggested that the exchange is involved in illegal activities, allowing traders to take too much risk, and by trading against clients. So two days later, after that, it was reported by Bloomberg that the Commodity Futures Trading Commission, the CFTC, was investigating BitMex as to whether they broke rules by allowing Americans to trade on the platform. So even though they were outside of the United States, the long arm of the United States regulatory, CFTC, was able to reach out and is able to do that. It's a fascinating thing, and say, we're gonna slap you with these violations against our rules because you're not doing everything you possibly can to ensure that Americans are not accessing your platform. So BitMex had no KYC, no AML. So KYC is know your customer, and AML is anti-money laundering. And these rules have been put into place in recent years, which state that the company or the exchange or the centralized organization that's providing these financial services needs to find out a certain amount of information, or all kinds of information about you. So this is why when you sign up at Coinbase or any of these other places that are doing KYC, AML, they need your photograph, they need your driver's license, they need your social security, they need your address, they need your phone number. I mean, they need everything basically. And this does not work. It's proven, does not stop money laundering, because there's just all kinds of other ways for people who are engaging in money laundering to do, including using physical US dollar notes. So it's more about just harvesting of information, and the IRS can subpoena these centralized companies and require that all your data be handed over. But what also happens is it's a huge security risk, because these companies get hacked, and then all of your personal information is stolen, and it increases the likelihood that the users are going to have their identities stolen. Huge issue, huge problem. Whereas if you go and use a decentralized DeFi platform like Uniswap, where there is no KYC, no AML, you don't provide any of your own personal information, so it can't get hacked. It can't get stolen. It's much safer for you as a user. But while this is often said to be done, these regulations are to protect you, that's not the reality. They don't actually protect you. They're actually to just make it convenient for your information to be tracked and to be accessed, right? Which, it's interesting, because in the United States, one of our core principles of our founding, and it's enumerated within our Constitution, is this idea that you are not to be subject to unreasonable search and seizure of your personal property or papers, and that has been completely eroded. It's eradicated, and now we know, everybody knows, there's no expectation of privacy. You cannot have any expectation of privacy. So anyway, these BitMex boys, they got in trouble, and Arthur Hayes, actually, the founder, is currently in the news also saying that he might surrender, because he's outside the United States, and he's been a fugitive essentially. But the United States has sought extradition, and so he is talking about actually surrendering here soon, maybe in coming weeks. So that might also be something interesting to watch. But BitMex moves on. and they do not have the volume that they once had, but they've regrouped and they have a new CEO and they're continuing on and they're expanding their product offerings. Now, what happened here was BitMex sort of with a philosophy that follows the creators of Bitcoin, Satoshi Nakamoto and others, was they didn't want to require their customers to have to give up all of their information and do the KYC AML thing. So they tried to avoid it and they got in trouble. And this is what we are seeing all across the board, is where you have crypto and DeFi and its love for and its desire to maintain liberty, privacy, to be borderless, to be non-confiscatable, to protect personal information and individuals from overreach of an authoritarian type of government that might track every last thing you do, and if you become part of any kind of group that is not talking about the correct type of speech or whatever it may be. This getting onto the extreme side and of where things could go, but that sort of founding ideas behind crypto was to protect individuals and their privacy. But as you have these companies that are working, that have to work within the banking system, for fiat on-ramps to buy crypto and do all sorts of things, they are capitulating, and they have to abide by these regulations and these rules. And so most of them are incorporating KYC AML. But it's going to be interesting to watch going forward, because one of the reasons DeFi just explodes is because, well, dialing that back a little bit, part of the issue is that when you have all that KYC and AML and all this, and you have the centralized banks essentially, which is what the exchanges become once they go down this road, it adds all kinds of costs and delays and complexities and annoyances. And it's just, so the whole point of DeFi is that you can go out and get a loan in 12 seconds. You can throw up some collateral with crypto. It's all handled by a smart contract. Boom, done. Super efficient. You don't have to get anybody's approval. It's just good all the way around for the users especially. So anyway, there's a lot here to think through, think about, but I thought I'd just mention it to you guys because it's interesting. Moving on to the final segment of the day and our top story. What about this bull run? Are we in the early stages of the bull run? Are we in the middle of the bull run? Is the bull run about to come to an end? Well, this author says now the Bitcoin bull run is still in the early stages, and the reason why? Key on-chain indicator. A key on-chain indicator shows that the Bitcoin rally is still at an early stage. The price of Bitcoin saw a major correction on the day as the global stock market pulled back. We've been watching and wondering for a long time. People have often talked about is when and if will we see a deleveraging of the cryptocurrency market from the stock market, or are they going to go in tandem, march in step? There have been times where it started to look like crypto was going to deleverage, and then there have been times where it's not. And recently it seems like it was not. But the theory has been that as gold was a safe harbor asset, safe haven, that people typically would leave the market in a market downturn and go into gold. Well, we haven't always seen that with Bitcoin, and it's been a curious thing that people have wondered about. Maybe we'll see it at some point. Also, when we talk about deleveraging, it'd be nice to see that happen with the market in Bitcoin or crypto, but it'd also be nice to see the other cryptos in the cryptocurrency market sort of deleverage from Bitcoin, because the same thing happens where whenever Bitcoin goes up, everything goes up. Whenever Bitcoin goes down, everything goes down. But anyway, getting back to the story, the top cryptocurrency dropped by nearly 8% in the last 24 hours, retracing most of the gains it recorded during yesterday's rally on March 3rd. According to William Clement, a cryptocurrency analyst, Glassnode's reserve risk indicator shows that Bitcoin's rally is still in the early to middle stages. As Clement explains, the reserve risk is defined as price divided by HODL bank. The indicator is used to assess the confidence of long-term holders relative to the price of the native coin at any given point in time. Hence, if the reserve risk is still relatively low compared to previous peaks, it shows that Bitcoin is not at risk of nearing a macro top. So currently, the reserve risk of Bitcoin is at half. Wow, that's significant. Half the level seen in 2013, 2014, and 2017. When the price of Bitcoin crashed well over 50% and entered a bear market. Well, that's a good sign, isn't it? Moreover, despite the weakness in Bitcoin over the past 20 hours, it is performing well, considering that the global stock market has seen a significant drop. That's true. We did see a little bit of deleveraging, actually. The market is down, but not as much as the stock market. Kyle Davies, the co-founder at Three Arrows Capital, noted that global macro sold off, yet Bitcoin has not seen a massive correction. Good stuff, right? So according to that metric, the bull market is still in the early to middle stages. Rock and roll. Now, I was talking earlier in the beginning of this episode in the introduction about this thought that I've been having concerning the market, and that is that if we make it through the month of March without any significant decrease in the market and in prices, I think that's going to be a really, really good sign that this hypothesis that I've been propagating, which is that there's so much new capital flowing into the cryptocurrency space with institutional investors and retailers coming on like they never have before, and that things are different essentially than they were in 2017, where we don't have the ICO craze, which then popped, with all the scams that were happening back then about this token launching and that token launching and Ethereum going through the roof because people had to go into Ethereum to buy those tokens, and the returns were just, mind staggering, and all these retail people came in and then they lost and they got scammed and they went away, and this time just feels different, but also the news, the macro global picture of everything that's happening with all these people coming into the space and the institutionals, as I said, and just news item after news item of Robinhood and Webull and PayPal and MicroStrategy, just and Grayscale, and the futures market on the CME of Ethereum, and I can just go on and on and on. If we make it through the month of March without a downturn, I think we're going to see some significant movement to the upside. Now, I don't like to do price predictions, That's not what I'm about. I'm a fundamental investor. I look at the projects and evaluate what is their team like, what is their technology like, what is their marketing ability like, what is the community like. These things, what is their use case? Are they going to attract developers? Are they going to attract new people and platforms and other things too? Are they going to be interoperable? Are they going to be, there's so many things to look at, but figure out what those products are. Get in and hold. If you try to trade, many people, person after person after person after person who tries to do this, for a while they think they're just really good and brilliant, and then they just get nailed, and then they kind of come crawling back and they're like, I was wrong. I should have just held. I would have done so much better. Anyway, I'm sure there's traders out there that are great traders in it, but I tell you what, most that I followed, most that are, you know, TA experts, for instance, they just seem to be wrong all the time. So my approach is more like Warren Buffett's was with stocks, and not that I haven't traded at times or don't, you know, it's great fun. It can be like sport, and if that's the way you view it, and if you have an amount of money that you can risk to lose, you know, and you're smart with it, where you invest and you pull out the profits, and you pull out the trade and pull out the profits, and you trade and you pull out the profits, and you sort of always just stick with maybe the original amount and pull out profits when you get them. You know, you can do your loss risk management, right? And so I'm not totally opposed to it, but overall, for most people, you know, and that's where the warning really comes in, is most people come in knowing very little, thinking they're going to do that. They're going to be this crypto day trader, and they just get devastated and destroyed, right? So, all right, friends, thank you so much for taking some time with me today. I really appreciate all of you. Please be sure to visit blockthrasher.com, sign up for a membership. We're constantly releasing useful information there. Currently working on a deep dive for Polkadot. Going to be working on a list of little known coins that you should consider, and that's going to be going out to members and members only. We're going to have a rating system. We're going to do all that analysis that I was talking about, like what is the team, what is the technology, what is the use case. Look at the white paper, look at the roadmap, all that deep background information, and then just pass that information on to you so that you can be most informed and make the best decision about your investments in crypto moving forward. All right, thanks so much. I hope you're having a phenomenal day, and remember, it's always a great time to earn more crypto. Talk to you soon now. Bye.